Trading looks simple from the outside. You open a chart, look for opportunities, and click buy or sell. It seems like a logical game, one where intelligence and strategy should be enough to succeed. But anyone who has sat in front of a live market knows it's not just about charts or numbers, it's about emotions. Trading has a way of pulling you into the deepest highs and the lowest lows within minutes. One moment you feel like a genius, the next you feel like a complete failure. This is the emotional roller coaster every trader rides, and unless you learn how to get off, it will control you, drain you, and eventually push you out of the market. Think back to your first big win. The rush you felt when the trade went in your direction, the adrenaline as your profit climbed, the surge of pride that made you believe you finally cracked the code. That high is addictive. It feels better than almost anything else, and it convinces you that you're on the path to success. But then comes the other side of the ride, the crushing low. Maybe the next trade didn't work out. Maybe you gave back all your profits. Suddenly, that feeling of invincibility turns into doubt, frustration, and anger. You go from, "I can do this," to, "Why do I keep failing?" in the span of a single session. That constant swing between euphoria and despair is what keeps so many traders stuck in a cycle. The dangerous thing about this roller coaster is that it feeds on your natural instincts. Human beings are wired to avoid pain and seek pleasure. A winning trade feels like pleasure, and a losing trade feels like pain. So, your brain reacts strongly to both, creating emotional spikes that cloud your judgment. After a big win, greed takes over. You want to replicate the feeling, so you take impulsive trades, chasing that high. After a big loss, fear and frustration take over. You want to erase the pain, so you revenge trade, over-leverage, or abandon your plan altogether. In both cases, you are no longer trading the market, you are trading your emotions. This is why so many traders lose money even when they know what to do. They have strategies, they understand technicals, they've studied indicators and patterns. But when real money is on the line, emotions hijack the process. Fear whispers, "What if this trade fails?" Greed shouts, "Take another one, don't miss out." Doubt nags, "Maybe your system doesn't work." Impatience pushes you into setups that don't align with your plan. By the time you realize what's happening, you've already sabotaged yourself. The roller coaster doesn't just affect your trades, it affects your entire life. You wake up thinking about yesterday's loss, and you go to bed dreaming about tomorrow's win. Your mood swings with your equity curve. When you're winning, you're fun to be around, full of energy, optimistic about life. When you're losing, you're quiet, angry, and frustrated, snapping at people who have nothing to do with your trades. This is why so many traders burn out, not just financially, but emotionally. They pour everything into the market, and the constant ups and downs drain their energy until they quit. The first step to breaking free from this cycle is awareness. You need to recognize that trading will always trigger emotions. It's unavoidable. You are putting money on the line, and money is tied to survival, status, and security. Of course you're going to feel something. The problem isn't that emotions exist. The problem is that you let them dictate your actions. You can't control whether you feel fear, greed, or excitement, but you can control whether you act on them. That's where most traders fail. They think the goal is to eliminate emotions, but the real goal is to stop letting emotions drive decisions. If you think about it, the roller coaster exists because you're attaching your self-worth to the outcome of each trade. Every win makes you feel like a winner, and every loss makes you feel like a loser. That attachment is poison. Professional traders don't see a win as proof they're smart and a loss as proof they're stupid. They see both as part of the process. A win is just confirmation that they followed their edge, and a loss is simply the cost of doing business. That perspective keeps them level-headed while everyone else is riding the emotional highs and lows. Before we dive deeper, let me ask you this. Are you struggling with fear, doubt, or overtrading? The truth is, Most traders don't fail because of bad strategies. They fail because of bad psychology. Consider two traders taking the same loss. The first trader feels crushed. He thinks, "I can't believe I lost again. Maybe I'm not cut out for this." He spends hours staring at the chart, wondering what he did wrong, and then takes another impulsive trade out of frustration. The second trader takes the exact same loss but shrugs it off. He says, "That's just one trade. I managed my risk, and it was part of the plan." Then he walks away, does something else, and comes back tomorrow ready to trade again. Both faced the same event, but one got destroyed emotionally while the other stayed calm. The difference is perspective, and perspective comes from detaching your identity from individual outcomes. The market doesn't care about your feelings. It doesn't care if you're on a hot streak or if you just blew an account. It will keep moving, creating opportunities day after day. The emotional roller coaster tricks you into believing that each trade is life or death, that this one win or loss defines your future. But in reality, trading is a long game. No single trade matters. What matters is how you handle the series of trades over time. If you allow your emotions to dictate your behavior, you will never be consistent, because your decisions will always swing between extremes. Breaking free from the roller coaster means accepting that you will lose. You will have bad days, bad weeks, even bad months. But those losses do not define you. They are simply expenses in the business of trading. When you stop taking losses personally, you take away the emotional power they have over you. And when you stop seeing wins as proof of your greatness, you stop falling into the trap of overconfidence. That balance, neither too high nor too low, is what keeps professional traders grounded. But here's the hard truth. Most traders never get off the roller coaster because they don't want to. They secretly enjoy the highs. They enjoy the rush of adrenaline, the excitement of watching their profits climb, the fantasy of becoming rich overnight. That thrill is addictive, and like any addiction, it comes with a crash. If you want to truly succeed, you have to decide what you value more, the excitement or the consistency, because you can't have both. The traders who survive are not the ones chasing highs. They're the ones who learn to be boring, disciplined, steady. They don't ride the roller coaster. They watch it from a distance while others lose their money. Think about it. Would you rather feel excited for a few hours and lose money, or feel calm and build wealth over years? Most people say they want wealth, but their behavior shows they're chasing the excitement. They want action. They want fireworks. They want the rush of quick profits. That's why brokers love them, because emotional traders always give the money back. The truth is, consistency is not exciting. It's boring. It's following the same rules day after day, taking small risks, logging your trades, and accepting losses without drama. There are no fireworks in consistency, but there is freedom. Freedom from stress, freedom from fear, freedom from the emotional chaos that destroys most traders. That freedom is what allows you to keep trading long enough to succeed. The emotional roller coaster is a trap, and most traders never escape it. They keep riding the highs and lows until they burn out. But the traders who break free are the ones who stop treating trading like a thrill ride and start treating it like a business. They know emotions will always be there, but they refuse to let emotions control the outcome. They accept uncertainty, they manage their risk, and they keep showing up with discipline. That's how you step off the roller coaster and finally take control of your trading journey. To understand why it's so hard to escape, you need to see how your mind is wired against you from the very start. Trading doesn't just expose your emotions, it magnifies them, pulling them out of the shadows and putting them under the spotlight. Fear, greed, doubt, impatience, pride, anger, they all surface when you sit down to trade. And once they're triggered, they take the driver's seat unless you consciously take it back. The emotional chaos of trading begins with uncertainty. Every time you enter a trade, you step into the unknown. You don't know if the price will move up or down, and no matter how strong your analysis looks, there's never a guarantee. Humans don't naturally thrive in uncertainty. Our brains are built to seek patterns, to predict outcomes, to create a sense of control. That's why the market feels so uncomfortable. It's unpredictable, and unpredictability creates anxiety. You place a trade, and your brain immediately craves certainty. It wants to know, will this win? Will I be right? When that answer doesn't come instantly, your mind fills the gap with fear or hope. This is why so many traders stare at their screens for hours, unable to look away from a single position. It's not because watching the candle move will change the outcome. It's because the brain is addicted to seeking certainty where none exists. Every tick of the price feels like a clue. Every movement feels personal. When the trade moves in your favor, relief washes over you. When it moves against you, anxiety spikes. And so, the roller coaster begins, driven not by logic, but by the desperate need for certainty. The second force that fuels the ride is attachment. Traders become emotionally attached to trades because money isn't just money. It represents safety, success, even identity. Losing money doesn't just feel like a financial setback, it feels like a personal failure. Winning doesn't just feel like making progress, it feels like validation. This attachment amplifies every outcome. Instead of seeing a losing trade as a neutral event, you see it as a reflection of your worth. Instead of seeing a winning trade as just another step in the process, you inflate it into proof that you're finally becoming the trader you dreamed of being. That attachment makes the highs euphoric and the lows unbearable. You can see how destructive this becomes over time. After a series of wins, you feel unstoppable. Confidence turns into overconfidence, and you start ignoring your rules. You take bigger risks, increase your position sizes, and jump into trades you would normally avoid. Why? Because you feel untouchable. Then, inevitably, a loss comes, and it doesn't just take your money, it crushes your ego. Suddenly, you're not invincible anymore. The same brain that told you you were a genius now whispers that you're a fraud. That swing from extreme confidence to crushing doubt is one of the most dangerous parts of the roller coaster, because it destroys consistency. There's also the role of time. Trading doesn't give you instant closure. Sometimes a trade lasts minutes, sometimes hours, sometimes days. During that time, your emotions are simmering in uncertainty, and the longer it lasts, the more intense the emotions become. Waiting for a trade to play out is often more painful than the result itself. The mind races with what-if scenarios. What if it reverses? What if I should close now? What if I miss a bigger move? That internal dialogue keeps you on edge, draining your mental energy long before the trade even ends. This is why so many traders exit too early or hold too long. They're trying to escape the discomfort of waiting. And then there's revenge. Revenge trading is the purest expression of the roller coaster, the point where emotions completely override logic. You take a loss, and instead of accepting it, you feel compelled to get back at the market, as if the market personally wronged you. You double your position, jump into setups without thought, and try to erase the pain with a quick win. But the market isn't your enemy. It doesn't care about your emotions, your history, or your need to feel whole again. The market is just moving, oblivious to your feelings, while you sabotage yourself trying to fight back. The irony is that revenge almost always leads to even bigger losses, which then fuel even stronger emotions, and the cycle spirals downward. Why does this happen? Because trading doesn't just challenge your strategy, it challenges your identity. Each decision in the market feels personal, and when you lose, it feels like the market is telling you you're not good enough. But the truth is, the market isn't saying anything at all. It's just a collection of movements driven by countless participants around the world. It's neutral. The only meaning attached to it is the meaning you give it. If you interpret a loss as proof of failure, then it becomes a wound. If you interpret it as a business expense, it becomes neutral. The market itself doesn't change, you do. This is where discipline becomes so critical. Discipline is the seatbelt on the roller coaster. It doesn't stop the highs and lows from existing, but it keeps you safe while you experience them. Without discipline, every emotional spike throws you off course. With discipline, you still feel the emotions, but you don't let them dictate your actions. This is why professional traders focus less on being right and more on following their process. They know emotions will flare up, but as long as they stick to their plan, those emotions don't cost them their account. But here's the uncomfortable truth. Most traders resist discipline because it feels restrictive. They don't want to follow rules when emotions are screaming at them to act. They don't want to miss out on a trade, cut losses early, or walk away after a losing day. They want freedom, the freedom to chase the high. But that freedom comes at the cost of consistency. The very rules they resist are the ones that would keep them from financial ruin. Discipline feels boring in the moment, but it's the only path to long-term success. Without it, you remain strapped into the ride, swinging from joy to despair until you burn out. Over time, the emotional roller coaster doesn't just affect your trading, it reshapes your mindset. You begin to anticipate losses before they happen, creating self-fulfilling prophecies. You sabotage trades because you're afraid of being wrong, or you sabotage your wins by moving stops or taking profits too early because you're afraid of losing what you've gained. The roller coaster trains you to expect extremes, so even when the market gives you opportunities, your mind turns them into disasters. This is why traders often say, "The market is against me." But the truth is, they're against themselves, trapped in the ride they refuse to leave. The irony is that the solution is not complicated. To step off the roller coaster, you don't need the perfect system or a secret indicator. You need to change how you relate to the market. You need to detach your identity from each outcome and treat trading as a process rather than a test of your worth. You need to accept uncertainty instead of fighting it, to embrace losses as natural instead of fearing them, and to commit to discipline even when your emotions are screaming otherwise. It sounds simple, but it requires daily effort, and most people aren't willing to do it. They'd rather ride the highs and endure the lows than live with the calm of consistency. But if you want to survive in this business, you have to ask yourself, how much longer can you afford to stay on the ride? How many accounts can you blow? How many sleepless nights can you endure? How many emotional crashes can you take before you quit? Because that's the end of the roller coaster. If you don't step off, it doesn't end with success. It ends with exhaustion and surrender. The traders who win are the ones who decide enough is enough, who break the cycle before it breaks them. They don't chase highs, they don't fear lows, they build balance. That balance is what separates the gambler from the professional, the loser from the survivor. And once you taste that balance, you'll never want to ride the roller coaster again. Every trader knows the feeling of being trapped in a cycle. You make money, then you lose it. You promise yourself you won't make the same mistakes again, and yet a few days later you find yourself right back where you started. It's almost as if the market has a way of pulling you into the same traps over and over, regardless of how much knowledge you think you've gained. This is the emotional cycle of trading, and until a trader learns how to break free, they will remain stuck in a loop that eventually drains not just their capital, but also their confidence, energy, and sometimes their love for the game itself. The first thing to understand is that trading doesn't just expose your skill level, it exposes your emotional weaknesses. If you're prone to fear, trading will amplify it. If you're greedy, trading will highlight it. If you struggle with discipline, trading will punish you for it. The market is like a mirror. It reflects back your state of mind in ways that no other profession can. Unlike a regular job where you can still perform decently while feeling stressed or distracted, in trading even the smallest emotional imbalance can lead to disastrous decisions. This is why most traders fail, not because they lack strategy, but because they can't control their emotional roller coaster. But achieving this balance is not easy. It requires discipline, patience, and most importantly, detachment. Detachment doesn't mean not caring about your trades. It means caring about the process more than the outcome. Most traders are too emotionally tied to whether a trade wins or loses. They feel proud if it wins and ashamed if it loses. This is dangerous because it puts your emotions at the mercy of the market, something you can never control. The market doesn't care about your feelings. It doesn't care about your hopes, fears, or expectations. It will move however it wants to move, regardless of whether you're in profit or in loss. The only thing you can control is your reaction. To break free from the cycle, traders must train themselves to treat losses as data, not as failures. When you take a losing trade, instead of asking, "Why does this always happen to me?" ask, "What information can I gain from this?" That shift in perspective is small but powerful. It turns losses into learning opportunities instead of emotional triggers. Similarly, when you take a winning trade, you must avoid the temptation to believe you're invincible. Wins are not proof that you've mastered the market. They're simply part of the probabilities playing out in your favor. By treating both wins and losses with equal detachment, you begin to stabilize the emotional roller coaster. Another way traders stay stuck is through overexposure. Many spend their entire day glued to charts, analyzing every tick, reacting to every move, and letting their emotions rise and fall with the candles. This constant stimulation keeps them trapped in the cycle. To break free, you must learn to step away. Sometimes the best trade is no trade at all. Sometimes the most profitable action is turning off your screen and letting the market do what it does without you. Ironically, this kind of restraint often leads to more consistent results because it prevents you from making impulsive decisions. There's also the issue of self-image. Many traders tie their identity to their trading performance. If they're making money, they feel like winners. If they're losing money, they feel like failures. This dangerous connection makes the roller coaster even worse because your self-worth becomes linked to something as unpredictable as the market. To truly step off the ride, you need to separate who you are as a person from what happens in your trading account. You are not your trades. You are not your P&L. You are the one executing a system, and your worth isn't defined by the outcome of any single trade or even a series of trades. Breaking free also means setting boundaries. If you trade without clear rules, your emotions will run wild. But when you have a structured plan with defined risk, clear entry points, and predetermined exits, you limit the influence of emotions. Rules act like guardrails that keep you on the road even when your emotions try to pull you off track. The mistake many traders make is ignoring their own rules whenever they feel emotional. They'll say, "Just this once I'll increase my lot size," or "This trade feels so good I don't need a stop loss." These small lapses eventually snowball into catastrophic losses. Discipline, therefore, is the ultimate weapon against the roller coaster. Still, no trader can achieve perfect discipline overnight. Breaking free is a gradual process. You'll still feel fear. You'll still feel greed. You'll still have moments of doubt. The difference is that over time, you'll learn to recognize these emotions and not let them dictate your actions. You'll learn to pause before clicking the button. You'll learn to review your plan instead of chasing a feeling. Slowly, the highs and lows of trading will begin to even out, and instead of feeling like you're on a wild ride, trading will feel more like a steady journey. In the end, the emotional roller coaster doesn't disappear. It's always there, waiting for you to climb aboard. The question is whether you choose to ride it or not. Most traders get on without realizing it, letting their emotions control every move. But the ones who succeed step back, take control of their own psychology, and decide that they will not be passengers on a ride they didn't design. They choose discipline over impulse, process over outcome, and balance over chaos. When you finally break free from the cycle, trading no longer feels like a constant emotional battle. It becomes what it was always meant to be, a calculated game of probabilities where discipline, patience, and self-control guide every decision. That's when trading transforms from a stressful roller coaster into a sustainable career. Trading is not just about reading charts, spotting patterns, or following indicators. If that were the case, every trader who spent a few weeks learning technical analysis would be profitable for life. But the truth is, the difference between success and failure is not about how much you know, but how well you can control yourself when real money is on the line. The emotional roller coaster of trading is what destroys more accounts than bad strategies ever will. To step into emotional freedom, you must fundamentally shift how you view both yourself and the market. For most traders, the journey starts with excitement. You open your first trades, maybe win a few, and feel like you've discovered a path to financial freedom. Then the losses come, and suddenly your emotions get involved. You feel fear, anger, greed, or doubt. Each trade begins to feel personal. You either want the market to validate your intelligence or to punish you for your mistakes. This is how traders stay trapped in a cycle. They let emotions cloud their judgment and then wonder why their results aren't consistent. Emotional freedom comes when you break this pattern and finally accept trading for what it really is. A game of probabilities where your edge plays out over time, not in one trade. The hardest part of stepping off the roller coaster is learning not to take results personally. Every loss feels like a judgment against your ability. Every win feels like proof that you're special. This up and down attachment to outcomes keeps traders addicted to the ride. But in reality, trading is not a reflection of who you are. It's a reflection of your discipline. You can be a skilled trader and still take a losing trade. You can be an undisciplined trader and still stumble into a winning trade. That's why outcomes don't matter as much as process. Emotional freedom comes when you judge yourself not by the result of any single trade, but by whether you followed your rules and respected your plan. One of the most powerful steps toward emotional control is realizing that the market is never wrong. It doesn't owe you anything. It doesn't care about your feelings, your hopes, or your dreams. It simply moves. The only thing you can control is your risk and your reaction. This truth frees you from the dangerous belief that you can outsmart the market or force it to give you what you want. Once you accept this, you stop fighting the market and start flowing with it. Instead of trying to bend it to your will, you bend yourself to the discipline of trading. Think about professional traders, the ones who survive year after year. They don't ride the emotional highs and lows the way beginners do. They aren't celebrating wildly after a big win, nor are they falling apart after a string of losses. Their emotions are steady because they understand that every trade is just one of many. They see the bigger picture. They focus on long-term performance rather than short-term results. This perspective doesn't make them emotionless, it makes them emotionally resilient. They still feel disappointment when they lose and satisfaction when they win. But those feelings don't dictate their decisions. That's the difference between being controlled by emotions and simply acknowledging them. To achieve this level of freedom, you must build habits that keep you grounded. This isn't about chasing motivation or hype. It's about creating routines that keep your trading consistent, even when your emotions fluctuate. A disciplined pre-market routine, a clear risk management plan, and an end-of-day review are not just about organization, they're about emotional stability. These practices keep you anchored so you don't drift into reckless behavior when emotions rise. They give you something solid to rely on when your feelings try to take over. Another key to emotional freedom is patience. Most traders fail because they cannot wait. They want quick results, instant gratification, and fast profits. But the market doesn't reward impatience. It punishes it. Every trader who jumps into trades without discipline is simply volunteering to give their money to someone more patient. Emotional freedom comes when you stop needing immediate results and start trusting that consistency over time is what matters. This mindset shift transforms trading from a desperate chase into a steady process. It's also important to accept uncertainty. Many traders secretly crave certainty. They want to believe that with the right analysis, they can predict exactly what will happen. But certainty is an illusion. No strategy, no indicator, no analysis will ever guarantee outcomes. The sooner you accept this, the freer you become. Because once you stop seeking certainty, you stop panicking every time the market surprises you. You no longer feel betrayed when trades don't go as planned. Instead, you understand that probabilities are playing out, and your job is not to be perfect, but to be consistent. Stepping into emotional freedom also requires humility. Many traders blow up accounts not because they lacked skill, but because they refuse to admit they could be wrong. Ego is one of the biggest emotional traps in trading. It pushes you to hold losing trades too long, double down when you shouldn't, or overtrade in an attempt to prove yourself. True freedom comes when you let go of the need to always be right. Winning traders don't care about being right, they care about making money. If a trade goes against them, they exit. No pride, no argument, no emotional battle, just action. That humility, that willingness to accept mistakes, is what separates consistent traders from emotional gamblers. Ultimately, stepping off the roller coaster is not about eliminating emotions. It's about mastering them. Fear will always exist. Greed will always exist. Doubt will always exist. You can't erase these feelings, but you can control how much power they have over your decisions. When you learn to pause, to detach, and to focus on your plan instead of your feelings, the roller coaster loses its grip on you. Trading becomes less about emotional swings and more about steady execution. At the end of the day, emotional freedom is what gives traders longevity. Anyone can get lucky for a week or even a few months. But to survive for years in the market, you must break the cycle of emotional highs and lows. You must learn to stay calm when others panic, to remain patient when others rush, and to trust your system even when doubt creeps in. This is not an easy path, but it is the only one that leads to consistent profitability. When you finally step into this state, trading changes. It no longer feels like gambling. It no longer feels like an emotional storm. It feels like a structured business, where decisions are made rationally, risks are managed carefully, and emotions stay in their proper place. That's when trading stops being chaos and starts being freedom. Not just financial freedom, but emotional freedom. So the question you must ask yourself now is this: are you still trapped on the roller coaster, letting your emotions dictate every move? Or are you ready to step off and take control of your trading once and for all? Trading is often described as a battle with the market, but in truth, the battle has always been internal. The candlesticks do not care who you are, the spreads do not care about your feelings, and the charts do not bend simply because you want them to. The market moves regardless of your hopes, your fears, and your dreams. What separates the traders who endure from those who burn out isn't superior analysis or access to some hidden secret. It is the ability to find emotional freedom in an environment that constantly tempts you to lose control. The emotional roller coaster every trader experiences follows the same path. It begins with excitement. You fund your account, take your first trades, and when you win, you feel unstoppable. Then a loss comes, and it hits harder than you expected. Instead of just accepting it as part of the process, you take it personally. You begin to question yourself, your strategy, or even the idea of trading itself. That's when the emotions begin their cycle: fear, greed, hope, frustration, and despair. Some traders get stuck in this ride forever. They jump from strategy to strategy, always chasing a way to escape losses, always believing that the next system will finally make it painless. But no system will save you from your emotions. Freedom does not come from finding a perfect strategy. It comes from mastering your mind. The most damaging belief traders hold is that trading outcomes reflect their personal worth. If you win, you feel smart. If you lose, you feel like a failure. This constant attachment to results keeps traders chained to the ride, rising and falling with every candle. But winning traders know that a trade says nothing about who you are. It only says something about probabilities playing out. A good trade can lose. A bad trade can win. The only measure that matters is whether you followed your rules. That is where true self-respect in trading comes from, not in being right, but in being disciplined. The reason most traders never find freedom is because they resist reality. They expect the market to reward their hard work, to move the way they want, to give them certainty where none exists. This resistance creates frustration. But when you finally accept that the market is random in the short term, when you stop expecting certainty and start embracing probabilities, a weight lifts. You are no longer chained to the need for every trade to work out. You simply let the process play out, knowing that over time, your edge will show itself. Professional traders have a different emotional posture than beginners. They are not ecstatic after wins, nor are they crushed after losses. They remain steady because they see the bigger picture. Every trade is one of thousands they will take in their career. They understand that emotions may rise and fall, but their discipline must remain constant. This is why you rarely see professionals chasing losses, over-leveraging, or jumping between random setups. They have trained themselves to stay detached from outcomes. Their freedom comes from perspective. To move toward emotional freedom, you must build habits that support your discipline. It is not enough to promise yourself you will be calm. You must design routines that keep you calm. A clear pre-market ritual grounds you before the chaos begins. Defined risk management rules protect you when emotions spike. End-of-day reviews allow you to learn instead of obsessing. These small structures are not optional. They are what hold you steady when everything inside you wants to break the rules. Patience is another pillar of emotional freedom. Impatience is what leads traders to force trades, to jump into markets without setups, to overtrade in the hope of fast profits. But every time you act without patience, you give away control to your emotions. The market does not reward rushing, it punishes it. Freedom comes when you stop needing immediate gratification and start trusting that consistency over weeks and months will provide the results you want. The more patient you become, the less desperate you feel. And the less desperate you feel, the freer you are from the ride. Another step is humility. Many traders destroy themselves because they cannot admit they are wrong. They hold on to losing trades, convinced the market will turn in their favor. They add to losing positions, trapped by ego. But ego has no place in trading. Every professional understands that being wrong is part of the game. They don't fight it, they accept it quickly and move on. Freedom comes when you stop trying to be right and start focusing on protecting your capital. You don't need to win every battle to win the war. You only need to survive long enough to let your edge play out. Emotional freedom is not about eliminating fear or greed. It is about shrinking their power over your actions. Fear will always whisper to you before you click, buy, or sell. Greed will always try to convince you to stay in just a little longer. But you don't have to obey those voices. The moment you realize you can feel fear and still follow your plan, you become free. The moment you realize greed can scream but you can still exit according to your rules, you are no longer controlled by emotions. They may be present, but they no longer steer the wheel. Freedom also requires reframing how you view losses. Most traders see a losing trade as failure. But what if a loss that followed your plan was actually a victory? Think about it. If your strategy has an edge, then every time you execute it with discipline, you're doing your job, even if that particular trade lost. By reframing losses as part of your system rather than evidence of personal weakness, you free yourself from the emotional pain that keeps most traders stuck. You stop chasing perfection and instead focus on execution. As you grow into this mindset, trading begins to feel different. The wild highs and crushing lows smooth out. Instead of chasing the thrill of winning and fearing the pain of losing, you begin to see trading as routine, almost boring, and that boredom is actually freedom. The market is no longer a storm dragging you up and down. It becomes a steady current that you navigate with skill and discipline. This is why long-term traders seem almost emotionless, not because they don't feel, but because they have trained themselves to respond differently. At the end of this journey, emotional freedom transforms trading into something sustainable. Without it, you will always be at the mercy of your own impulses, burning through accounts and repeating the same mistakes. With it, you gain the ability to stay consistent, no matter how volatile the market becomes. You no longer need the market to make you feel good, nor do you let it destroy your confidence when things go wrong. You become balanced, patient, and steady. So here's the question you must face. Will you continue to ride the roller coaster, letting emotions dictate your every move, or will you step off once and for all, choosing the freedom that comes with discipline?